Hello and welcome to the final trading day of the third week in January right here on Business Incorporated, live from Channels HQ. Here's what's coming up in the next 55 minutes. Data from the Central Bank of Nigeria shows foreign airlines repatriated $1.7 billion in the first quarter of 2023. And Kenya gets a $210 million loan from Trade and Development Bank as Eurobond maturity looms. Plus, global ratings agency Moody's revised its outlook on Egypt to negative. And it's great to have you join us. I'm Ladi Williams. Let's get the top stories that set your agenda now. Starting with the oil market, we see oil prices drifted lower today after a rally that was yesterday as geopolitical tensions and disruptions in U.S. oil production from the cold blasts were countered by concerns over slow demand growth in China. Brent crude futures fell about 17 cents to $78.93 a barrel, while the U.S. WTI crude futures that slid just 3 cents to $74.05 a barrel. Both benchmarks gained about 2% on Thursday as the International Energy Agency, the IEA, joined producer group OPEC in forecasting strong growth in global oil demand and on track to end this week around 1 to 2% higher. And data from the Central Bank of Nigeria's balance of payment compilation revealed airlines in Nigeria, foreign airlines, withdrew about $1.7 billion in the first quarter and the second quarters of 2023. The total credit to the balance of payment account from airline travel was about $19.39 million. The amount on the debit side of the balance of payments includes how much was spent on tickets by passengers, cargo, and others. Despite this, foreign airlines have complained consistently about their inability to repatriate all their funds as of November 2023. These airlines disclosed that about 90% of their $783 million trapped funds have not been paid. The Executive Vice Chairman of the Nigeria Communications Commission, Dr. Aminu Maida, has revealed some strategies he will employ in his administration. Dr. Maida says that top on the agenda are collaborations with other government agencies, as well as taking decisions based on data. He shared these during a media briefing in Lagos. Take a listen.
It's 100 days since Dr. Aminu Maida took over the running of affairs at the Nigerian Communications Commission, the NCC, as the Executive Vice Chairman. After perusing the structures and tasks before him, he meets with members of the fourth estate to share his observations and strategies to tackle issues.
In the spirit of how we've been working with our stakeholders, whether it is government, whether it is yourselves in the media, whether it is even the Nigerian consumer or telecom service, I think collaboration is going to be a very, very strong driver for us. The next driver is going to be being data-centric.
Then journalists are given the opportunity to ask questions ranging from concerns of expansion for internet service providers in Nigeria.
Recently, some of the digital service companies have started landing some red cables in Nigeria, which is bringing more connectivity. As that connectivity begins to expand into the hinterland, the ISPs will be the ones who will pick it up and take it to end users.
The variations by states in the treatment and fees of right-of-way for broadband infrastructure also came up.
Imagine the economic activity that can be enabled when you are connected with fiber. So I think that's the approach we're taking, and we're using an advocacy, we're approaching it using advocacy.
And then the recent dispute between Globacom and MTN Nigeria.
The Commission has intervened because the primary interest for us is the consumer. I think it's one of those things in any relationship you have disputes and misunderstandings. But the key thing is that both parties are at the table and there is a commitment. There's a commitment, a very firm commitment that these issues will be resolved within the next 21 days.
The NCC maximized the opportunity by sharing information on channels for lodging complaints and requests for guidance on various topics.
Now to our first conversation this Friday. The Nigerian Employers Consultative Association, that's the body for employers, has confirmed that at least 15 multinationals have exited Nigeria in the last 3 years. The body has also raised alarm over Nigeria's rising inflation rate. Well, joining us now is Mr. Adewale Smart-Oyinride, Director General, Nigeria's Employers Consultative Association. Great to have you join us, and happy Friday.
Thank you very much for having us, and Happy New Year, viewers.
And Happy New Year, too. So definitely this is quite a sad one. There are 15 multinationals leaving. That means job losses for people that were employed in those companies. What do you think can be done to either attract new multinationals at this time and somehow keep the existing ones?
Well, it's once you have a clear view of the challenges, then it becomes easy for you to address the main issues as they arise. And it's instructive to say that for any business at all to exit an environment, it's not a 1-month decision, it's not a 2-month decision. It's probably a decision that they've considered for over a year or 18 months at most. So the challenges they faced, both from the regulatory context, from the legislative context, from issues arising from to access to finance, so those issues eventually will make a business to decide: do we stay or do we leave? Now we have many of those businesses that are leaving, and the challenge for us is the consequences of their leaving. Sometimes we lose sight of the key issues. Now, for a multinational or one company to leave, it will surprise you that you probably will have 1, 2, 3, 4, 5 other companies supplying that same company inputs. So once that company leaves, we've also put into jeopardy the existence of other companies in the value chain that are supplying that same company different inputs. So those companies, they will either close down or reduce their capacity utilization. So focusing on the multinationals, it's quite important that we don't lose sight of the many other businesses in the value chain, the many other employees in the value chain that will also probably lose their job. And what can we do, basically? What organized businesses have asked over the years has been a hospitable environment for businesses to thrive. It's globally accepted that for every 10 jobs created, the private sector creates at least 8 of them globally. And if we want to continue to address the issue of unemployment, then we must provide the private sector with the environment that it needs to thrive, environment it needs to be sustainable, and environment it needs to be competitive. It's as simple as that. It's not rocket science. Provide infrastructure for the private sector to operate, provide access to funds, let the fiscal and monetary policy environment be conducive, let government policies be consistent, because over the past few years, we've had issues with past administrations where there will be a policy pronouncement and businesses have made plans based on those policy pronouncements. And within a short while, government will unilaterally change those policies with their consequences for investors, their consequences for the business, and their consequences for the employees, not to talk of the community and all those who has some level of stake in those businesses. So our view is this: let government continue to provide an enabling environment, both from the regulatory perspective, also from the legislative perspective. Let the environment be conducive for any business at all, either it is a foreign business or either the local businesses, either MSMEs or SMEs. Let the environment be conducive for such businesses to operate. That is probably one of the panaceas to resolving the issue of unemployment, to resolving the issues arising from insecurity, and many other issues that we face in this country.
Right, because I guess if the environment is harsh for the multinationals, then definitely even the locals must be feeling the pinch, at this time. But looking at the body language of the government, at this time, what are you seeing for 2024, when it comes to, the business environment and, for multinationals and local businesses?
Well, I think without missing words, I think we can give this government some level of commendation because of the certain steps that has been taken. The fiscal and monetary policy environment is going through a bit of reforms. The Taiwo Yedele Presidential Tax Reform Committee is doing a good job, and we hope, and I hope earnestly, that the recommendations of that committee will be put into firm implementation. We also know there are a bit of reforms that are going on in customs, reforms going on within the context of issue of the forex. We know the refineries, Port Harcourt refineries, about coming on board to complement the Dangote refineries. So we know certain steps are being taken that might start to yield fruits towards the end of the second quarter or the third quarter of this year. Our plea is that government should, whatever intervention is coming, the intervention for the manufacturing companies, the 75 billion that we're talking about, the different interventions that have been proposed, that government will expeditiously implement those interventions so that those that are still existing can continue to be sustainable, and then we look at long-term competitiveness for all of them. So the overview, the trend for 2024 is looking positive, not in the short run, but probably in the medium to long term within the context of the year 2024.
Yeah,
the first quarter, the second quarter, we might still witness these same challenges that we have.
Right. We've heard from the likes of Mr. Orwani that before we can get a soft landing, sometime there needs to be a lot of heavy lifting, the first few quarters of 2024. But another burning issue right now is inflation. We've seen a new high. The last report from the MBS, 28.92%. Experts tell us that inflation in Nigeria will peak soon this year. What are you seeing?
Well, the concern for inflation for us, for employers, is more of a two-edged sword, or double jeopardy, so to say. Because generally, as the cost of living continue to increase, it creates pressure on the disposable income of an average Nigerian on a household. And if you remember, in few weeks' time, or a few days' time, the negotiation for a new national minimum wage will also commence. And if we are at this stage struggling with this high inflation rate, then it also put pressure or changes the dynamics of the negotiation within the context of the national minimum wage. So we hope the CBN will take proactive steps to arrest this downward slide, but it's part of the key responsibilities of the CBN. And most especially, they should be bold enough. When a policy or a regulation or whatever action you are taking, if it's not yielding the kind of results that you want, there's no reason continuing in that path. We should be bold enough to take a review and probably backtrack on some of those policies. A mentor once said, it's better to be a bit inconsistent than to persist in error. And that's one of the things that we witnessed in the last administration. Even when policies are not working, when it was obvious that things are going down the hill, they still continue in that path. And we hope this government will be bold enough to review those policies that are not working and also engage the private sector, deepen its engagement with the private sector. While progress has been made in the context of that engagement, but we believe a deepened engagement, a deepened partnership between the private sector and government will hasten our trajectory of growth.
And definitely the double whammy of rising inflation and currency devaluation, that weighs heavily on wage earners. How are employers managing employee expectations in 2024?
Well, it has been tough, really. It has been very tough, and we must commend the resilience and doggedness of an average Nigerian business. And the view for us is this: in the midst of the challenges, in the midst of the problems, employers have remained faithful within the context of their responsibilities. Employers have remained faithful. Even before government addressed the issue of the consequences of fuel subsidy, employers have taken proactive steps to support their employees. Employers have come up with different work models, working from home, 3 or 4 days, 1 or 2 days working from home. So a lot of schemes, a lot of innovative effort has been taken by the private sector to support their employees. I must also commend the employees for their cooperation and for their understanding throughout this very difficult period. But I must confess that it has not been easy, and we must commend that resilience that has been demonstrated by the organized private sector.
And have employers been able to, manage to keep, employees at this time with the whole jackpot syndrome?
Well, if you remember in 2020, during the height of COVID, when businesses were practically shut down, we had an MOU with organized labor that employers will not downsize. And employers, we kept faith with that MOU during that very, very, very difficult time. And now when we are facing, when the economy is in transition, as some have said, I think employers have also kept faith with that agreement. The issue of downsizing, they always come up when it's become extreme, when it is absolutely impossible to explore other options. But as we speak, hardly will you find the issue of downsizing taking the center stage within the context of our conversation. Without prejudice to employers that have left, those that have left naturally, their employees will be asked to leave. And we are making effort and also hoping, honestly, that government reforms, when they start yielding fruits, those employers that have left will probably consider coming back to the country to reestablish.
Hopefully, hopefully we can talk about maybe jackpot at some point, hopefully. But definitely we know, employees at this time in 2024, with their disposable income, pulled from every side, they might be expecting more pay, in 2024. How are employers looking at this?
The need for a new national minimum wage is absolute. We support. We are a strong advocate and a strong partner with other social partners within the context of the negotiation of a new national minimum wage. It is due from the 30,000 that we had in 2029, and you agree with me that 30,000 can hardly take anybody home in 2024. So, I said the negotiation will start in a few days' time as affirmed by the Honorable Minister for State, Labour and Employment. And when we get to that negotiation table, all parameters will be looked at, the needs of workers and their families, the general economic situation, productivity. So many issues will be brought to the table for us to arrive at a workable and a pay that can actually take workers home. I want to preempt figures. I want to preempt an amount that will come up as a final amount or recommendation to government for national minimum wage. But we know that a robust engagement will be held during the committee's meeting, and employers are open and willing to make sure that things work on both sides, both for workers and both for the employers.
Do you think private sector employers can manage to raise wages in 2024?
Well, as I said, we are not averse to wage adjustments, and everything will be as a result of each negotiation. And it's also instructive for you to note that in the private sector, the dynamics of wage review is quite interesting, because on a yearly basis, there is always wage reviews through the instrumentality of performance appraisal, and sectorally, there is always either 2 years or 3 years negotiation at the sector level. So collective bargaining goes on in the private sector every 2 years or every 3 years to review wages and conditions of employment. So in the private sector, we are far ahead of the game within the context of wage negotiation and wage adjustment. And we are hoping that same instrumentality, that same dynamics will play out when the committee starts its meeting, for us to arrive at a wage that is realistic for workers, that can take workers home, and also we keep organized businesses in business.
All right, I do hope employers and workers can get the very best out of 2024, even with all the macro issues at this point. Thank you so much for sharing your perspective with us, Mr. Adewale Smart Oyenride, Director General at NECA. Thank you so much.
Thank you very much for having us once again, and Happy New Year once again.
Happy New Year. All right, we'll take a break now. When we come back, we head straight to the markets. Do stay with us. This is Business Incorporated. Welcome back. Let's get the details now for the markets. We have Willie Bonk joining us right here with all the details.
Hi, Laddie.
Great to have you, Will. And I have my eyes on the cement giants. You know, at this point, yes. there's a lot happening with cement. You know, at this time, and we did see the billionaires at play at this point.
Of course,
Otedola acquiring 6 billion naira worth of Dangote cement, shares at this point. So I'm wondering, is it because they're BFFs, or what is Mr. Otedola seeing?
Maybe because they're best friends. But I mean, does Mr. Otedola even know that Otedola is even buying these shares? Because we don't even know. We saw what happened with Transcorp, and we saw what happened with First Bank. He's a prolific share buyer. Let me just put it that way. He has this penchant for going into stocks, and then when he buys them, you see that stock rally. So I don't even know where Dangote is meant to be going now. The share price at this rate, because right now the stock market is really on fire. We're seeing it at 94,000 points at intraday, and I don't know where it's going to head to if this continues.
And we're seeing billionaires like Mr. Otedola bringing in 6 billion
into the market
at this point. Do we see more billionaires? How many billionaires do we have?
Right now, we're going to be counting. We're going to be counting because, Laddie, it beats me to see that Otedola is playing into the cement industry right now. From Geregu, the power industry, moved from the financials to the power industry, and now he's into the cement industry. Now we don't even know why he's taking a stake in Dangote Cement. Probably
just like that, 6
just
billion
like that, just 6 billion naira.
God, when can I do that?
Laddie,
hopefully soon.
Hopefully soon. This year, let's set that goal. So we see the markets, it's really hot, and we're going to start with equities in Africa, where sentiments were positive at intraday. We see Nigeria's NGX crossed 94,000 points at intraday, up 2.65% as of the time I checked. But like one analyst described it, they said the market is like hot tea right now, not cool as yogurt. Now we look at South Africa. GSE is up at intraday 0.54%, very good at intraday. Elsewhere, Egypt, the EGX is closed Thursday, but closed up in positive territory. Also, Kenya closed Thursday's session in the green. Now, let's check out activities at the NGX, what's driving sentiment at intraday, and we're going to be talking to Mukhtar Mohammed. He's the CEO of Finance with Mukhtar. Good afternoon, Mukhtar. Now, sources say, let me just start with that, billionaire investor Otedola, which, as I was talking with Laddie, is reportedly acquiring shares in Dangote Cement. Now, this is looking like deja vu. Should we expect in Dangote Cement what we saw with Transcorp?
Well, if that's your expectation, I think your expectation is being met, because today Dangote's cement is on fire. It has gotten above 48 naira, and so 50 kobo increment in its price. So definitely that answers your question. That means wherever Otedola touches, it begins to go up. But again, like you said, you and Laddie said in the studio, hopefully it won't end what happened before now with Tony Enimelu, Transcorp, and there was a certain time he also had this issue with Aligo Dangote also in the oil and gas sector. So hopefully Dangote is aware that Otedola is buying into Dangote. So they are best friends, so something is cooking in that space. Like you said, the billionaires are fighting, and when the billionaire fights, those that are little shareholders tend to enjoy more. So it's not left for the shareholder to say, oh, do I want to offload to the billionaire and make my money and stay, or do I want to be in the class of the billionaire and stay with them there? So that's a decision that every shareholder would have to make on his own.
Okay, well, you said that the stock price, as we're still on Dangote Cement, it opened at 350 naira this week, but as last I checked, it was 489 naira. I don't know if it says that it's open today at 489 naira. I don't know how much it has added. You've mentioned that.
It's selling at 500.
500 naira. Now, do you see it going higher than 500 naira?
500.
Do you see it going higher than 500 naira this week at the end of this month? Do you see it hitting 1,000 naira?
Wow, 1,000 naira. I think that will be an uphill tax, but in the near future, I think it will go up. it's already about 540 something naira at the close of market today. So hopefully, I think so. It will go up.
So what do you expect for, because you're seeing a lot of stocks climbing to the 1 trillion naira, market capitalization. We've seen Geregu join that league. Transcorp Hotels recently joined. Can we say that sentiments are driving the market's capitalizations to the Suits League, because we don't know if it's going ahead of fundamentals?
Well, when you talk about fundamentals, when you look at those companies that have hit the trillion and naira mark, we talk about Dangote Smith, definitely is a good story. It's a cross-border share. Then you talk about Transcorp Hotels. I have my own reservation in hitting that mark. So outside of that, you look at Boa Cement. You talk about the conglomerate sector. I think I'm not surprised that they are there. Then you look at the banking sector; they have strong fundamentals, with the exception for Transcorp, which I have my reservation about, because hitting 100 naira, what the fundamentals and when you know what has happened in that stock between we always come back to Otedola and Tony, then you begin to say that is strategy to make sure that nobody buy into that company any longer. So we have to wait and see. But I think some of the stocks that are in the trillion, they have the strong fundamentals. Their results are good. Their PE ratios are still good. Their earning per share is still very strong. So they still have the tendency to be able to meet up with that.
And so let's delve more into Transcorp and the concerns you have about them hitting the 1 trillion naira market capitalization. What are your real concerns here, and what do you think investors should be looking out for?
No, now you talk about which of the Transcorp. Now there are two Transcorp there. You have Transcorp Hotel, that's the one that have hit 100. I think that's the one you're talking about. Or Transcorp as the Transcorp company there. Which of them are we talking about now? If you're talking about the hotel, that's where I have a concern about. But you're talking about Transcorp itself, I think it's a stock that is going up. Is not too surprising, even if today is dropping. Remember that they are into a lot. They are into power holding. They are into oil and gas. And again, we might not see it coming, but it might come. Remember, the Kaduna discos are having problem, and when there is a problem in a discos, the next person that really goes there is Transcorp. Antonio Lumino is always interested in power. He see that as one of the cash cow that should be driving the Nigerian economy in the near future. So, won't be surprised if tomorrow you hear that Transcorp is buying into Kaduna disco. So. And definitely with that, I think Transcorp itself is a good company. And remember that a lot of investors have suffered long in Transcorp. Remember the history of Transcorp. I came to the market. Our President Obasanjo really was the brain behind Transcorp to get a fully Nigerian company into every sector of the Nigerian economy. And that stock have not lived up to expectation, but for the first time now it's beginning to live up to expectation. And I think investors in that are enjoying it. For Transcorp Hotel, they say they have a conglomerate of hotels. Some of their hotels have not been completed up to this moment. So that's why I have my concern on Transcorp Hotel. But for Transcorp, it's a company I think is doing well.
And yeah, talking of Transcorp, we did know that when it was trading below, say, 2 naira, as at the start of last year, 2023. But when Otedola got into the market, when he got into that, started buying the stocks, we saw it rally now. It's currently trading at 19 naira. Do you see, what do you see for this stock price? Do you see it going higher? What's your projection for Transcorp? Do you think it's got the fundamentals? I know it's going into the power sector. It has a lot of stake. Investors are definitely going to invest. But what do you see for Transcorp in terms of its outlook? Can it stand the test of time?
Well, I'll answer that question like this. If you look at Transcorp and Geregu, they are in the same sector. Geregu is trading at almost over 300. Why should Transcorp be trading less than what it is trading now? So I think that answers your question. Still a lot of value in Transcorp.
Okay, fantastic. So now let's look at stocks that are driving the all-share index up at intraday. So what are the movers at intraday? What is really moving the market, driving it up to 94,000 points? And I think it's probably going to hit 95 to maybe next week. But what's driving the stocks right now?
Yeah, Will, I think Dangote is driving the market. Boa Cement also is there. Julius Berger is there. I think those are the main stocks that are driving the market. At the moment, Dangote Sugar also is there driving the market too. So at the moment, as it stands now, I think it's all about Dangote. Then Eternal Oil, after that announcement yesterday that They have become the official lifting of, petroleum product from Dangote refinery. And also they've entered into agreement with some other trucking company also on the upside today. For the banking sector, the big bank, the tier one bank, it seems that the bull is beginning to leave them gradually with only UB in the gainer side for assets. It's in the loser side of at the moment intraday. But like I always say, you never can say. Zenith also is there losing. Then GTCO also on the losing side. Access also on the losing side. First Bank also on the losing side. Fidelity Bank on the losing side, and also FCMB on the losing side. And so for that bank, for the banking sector, that's what it looks like. I think what is driving that L-share index today is the conglomerate sector. And when you talk about the conglomerate sector, you could only just see the cement sector and then the construction sector, Julius Berger. Those are what are driving the market intraday.
We're looking at the banking sector. Do you think that we're going to see a major pullback? Because most analysts are saying we should trade with caution now, that the market is just too hot for investors to just dive in. What's your advice to investors right now that the market seems to be going, like a train without, brakes, let me put it that way. So would you say that the market is heading in the direction that the correction will be a great fall?
When we talk about correction, then you look at fundamentals. And again, when you look at this market as it stands now, even with the movement of these shares, you look at their earning per share for third quarter result, most of the bank were doing double figures, about 12, 15, and then we don't expect that to trend to stop going forward. We have pillars, even some banks like FCMB have already said in the full year they might be making up to 79 billion profit after tax. So definitely the fundamentals for the banks are still strong. When you look at, like I said, the PE ratio, the earning per share, the third quarter results, I don't think there's any cause to be worried about that. People always think of it's perception. It depends on when you were in the market, where you are, when you bought those shares. And like I said, the fundamentals are still there. Remember that the CBN we're still waiting for CBN to give us a direction of that bank must capitalize to 1 trillion. The first tier banks have already done that already with their market capitalization. So you see a lot of activity in the second tier bank, and you could also see most merger and acquisition also, even from the tier one bank or buying the tier two bank. So definitely, as far as the bank is concerned, I think the fundamentals are still strong. Like I jokingly tell people when we talk about the market as it stands now, there's the highest share in the market as today is South Africa. And when you cross that by the dollar and you decide to do an exchange rate of just 1,000, averaging both the official and the parallel market, it's still $2. So, and you are talking about a market that is the best performing market in the world, and the highest price in terms of a stock there is $2. So definitely that shows you that there is still a lot of value in there when you look at that. And also, you mustn't forget that what is driving these sentiments now is because of the fundamentals of these banks that are strong. Mustn't forget that most of these banks are also scattered all over Africa. Just yesterday, Access was acquiring a bank in Uganda. So there's a lot of things going on in the banking sector. They are acquiring holding. You also not forget that they are a holding company now. So they are also into other businesses. So definitely with that, the Muslim valuation of those banks should not be like where they stand alone. They should be valued according to their holding structure, because they are going to go into a lot of other sector of the Nigerian economy, and they have the liquidity to drive this sector. So I don't think there's any need to panic. And we, like I always say, this market move out today is being moved by Nigerian investors, not like what we have the foreign investors. And you know that we're still waiting for both the foreign portfolio investors to come into the market. And remember, we've been delisted from the frontier market, the frontier market also. And if we get the two-way exchange system with the government say they are working on to make sure that they clear all the backlog of companies' funds that are in Nigeria, that could also drive investors into the market. And when investors are coming, the first place to benefit is always the equity market. So there's a lot of permutation. I don't think people are afraid of what happened in 2008, but I think the scenario now is very different because we can see that the banks are very liquid.
Oh, you mentioned that the fundamentals of these big guys in the market are really strong. Well, let's look at the penny stocks that are in the market as well, which investors are also, putting their hands on right now. What would you say is the sentiment driving the movement in those penny stocks?
I listened to you and Ladis, was it 2 days ago or something, last week, and you said, beware of the bull trap. And so when you see the bull comes, the penny market, the penny stock seems to be the one. So that's the trap that you are trying to tell investors to beware of. So when the bull runs, then the penny stock sometimes just seems to move without fundamental. So that's a bull trap. So it depends on which of the penny stock you are talking about now. But if you talk about the penny stock and you're talking about the insurance sector, outside of name insurance, Cedar Insurance, Manson Insurance, every other of those insurance companies are stocks that have been struggling all this while. They've been there in the about 20 cover, 30 cover. And so investors need to be careful in that stock. So that is the bull trap you talk about. You need to look, when you talk about the bull trap, sometimes it's telling people beware of the penny stock, because the market has what we call a snowball effect. When something happens somewhere, it got to happen the other way.
So what's your outlook?
When there's a saying that when ship come to shore, the fundamentals comes to play. And when the fundamental comes to play, the first people to suffer are those that do not have a strong fundamental. And that is where the penny stock comes to play. Depending, like I said, depending on which penny stock you're talking about.
So what's the outlook for the markets, let's say for the close of the month and then probably the rest of the year? Where do you see the markets going?
I had a joke with somebody. I said, if Access Bank closed today this year at 30 naira, has it done so much? Has it not done well? So when you look at that output, I think what we really say the year will not close well if people begin to see this banking stock comes to where they were before. But I'm still very, very optimistic to say that I see positivity towards. Not forget that we are coming to that point of the earnings season, and when investors will also be rewarded. And so that could also be a game changer. We could also see the exchange rate stabilize. We attract investors into our market. We could also see macroeconomic stability coming. And when you talk about macroeconomic stability, then you begin to look at the sector like the petroleum sector. Dangote's refineries on stream. The pressure on the currency might not be there any longer. So there's a lot of optimism that drive the market this year, both in macroeconomic area. So for me, I think the market will close positive this year. I think the market will definitely close positive this month. It's already closing positive will, because at 2-something%, and we are just at the beginning of the year. So there's a lot of optimism. But again, not to forget that the market is driven by two things, and that's those two things we have to guide against: fear and greed. So it depends on which side of the spectrum you are. If you are for the fear side, then you begin to panic and the market will panic. But if you are in the greed side, if you are greedy, then you want to say, let me take profit, and also the market could come for you. So it depends on which side you are. Fear and greed will be the determining factor of the market this year.
Okay, so you've not talked about the oil and gas space now. Those companies that have been approved to sell Dangote fuel. We see Etherna has just joined that list. We have Total, MRS, and we've seen that MRS is gaining traction right now. So what do you advise investors? Should we get into the market now and buy these stocks, or should we just wait and see till they start lifting the fuel?
I would say buy Eternal Oil, because when you look at the price difference between Eternal Oil, Corn Oil, Total, that shows you there's a lot of value. Sometimes when it comes to stocks, you see Eternal Oil move, not because it has that very strong fundamentals. Even the fundamental of Eternal Oil is strong, but you see Eternal Oil move because a lot of investors that want to play the oil and gas sector will not have the fund to go into buying corn oil or buying MRS or buying Total because of the price, and they will just stick to Eternal Oil. And again, Eternal Oil seems to be in that league because what they are doing, Eternal Oil is also doing, so it will definitely turn on. Ask me think that's a stock that investors should look at. Eternal Oil. I would have said Owando too, but you know what is happening in Owando. We don't know when they will delist. We don't know whether they will still delist. So investors should be careful on that space. But for Eternal Oil, if you ask me in the petroleum sector, which stock should I be buying now? I'll say buy Eternal Oil. Buy Eternal Oil.
Thank you so much, Mukhtar Mohammed, CEO Finance with Mukhtar, for your perspectives. Always good to have it. So here it's investors, you know where to go when you want to dig into the oil and gas sector. So let's move on quickly to the Middle East and see how markets closed today. Major equities were closed today, except for the UAE, where the Abu Dhabi index was down at intraday 0.36%. We see Dubai trading in positive territory, 0.38%. Now, still within the region, we see Saudi and the Qatari indexes trading, well, they've closed yesterday, but they traded in negative territory. Now, going to the US, overnight, we saw that all three major indexes rebounded, and they were powered by tech companies. Now, futures linked to the broad market, that's the S&P market, gained 0.88%. We see the Dow Jones Industrial Average more than 0.5% up, and the Nasdaq futures rose 1.35%. Now, on a weekly basis, the Nasdaq is standing out with a 0.55% advance, while the Dow is down 0.32%. The S&P 500 is marginally lower by 0.06%. Now, Thursday's gain were powered by, as I mentioned earlier, major advances in the technology sector after the Bank of America upgraded shares of Apple to a buy rating. Now, Apple stock closed 3.3% higher. That's marking its best day since May the 5th, 2023. Now, tech shares rallied even as the 10-year Treasury yield topped 4.1% on Thursday. Now, Congress also passed a bill to avert a partial government shutdown. This stopgap measure is keeping the federal government funded through March the 1st and March the 8th. Now, let's check in on Asia. Japan's Nikkei 225 rebounded after 2 straight days of losses, climbing 1.4% to close. Now, South Korea's Kospi also gained 1.34% to finish at 2,472 points, while the small cap Kosdaq saw a smaller gain of 0.28%. Hong Kong's Hang Seng Index slipped 0.72%, now reversing earlier gains, while the mainland Chinese Shanghai, we see that falling 0.47% after rallying late on Thursday. Australia, however, saw a rise of 1.02% to close at 7,421 points after 3 straight days of losses. Investors also assessed Japan's December inflation numbers, the last key data before the Bank of Japan's first monetary policy meeting of 2024. Now, Japan, which is the third largest economy, saw headline inflation rate hit its lowest level since June 2022, cooling to 2.6% from 2.8% in November. And the Bank of Japan is kicking off its 2-day monetary policy meeting on January the 22nd, and will announce its decision the next day, Ladi.
Right. I guess final trading day of this week, and we see the NGX already looking really good.
Really good.
Hopefully we get some kind of fear greed index, for that market to see how greedy
investors can get.
The investors there are. Thank you so much for the details, Will. Well, let's take it to Europe now. See, Germany's stock market index had a pretty good year in 2023, climbing around 20%. And this is due to some companies' strong revenue and profit. We see Lars Holter joins us there to give us the details. Great to have you, Lars. So what else is behind the expected uptick in the DAX?
Thanks for having me, Ladi. Yes, very interesting. Only some of the DAX gains that we're expecting this year will come from a company's performance in the real world out there. We've seen that also in 2023. More than half of the DAX gains were due to share buybacks. Now, this practice of buying back shares has always been around. As a matter of fact, the DAX index busiest company when it comes to picking up their own stocks is not even in the index anymore. That was industrial gas giant Linde, who left the index a year ago. Over the past few years, that one company alone has spent over 16 billion euros that way. But let's look at the current buyback business. The 40 DAX companies have a combined 27 billion euros set aside at this point for share buybacks, and at least 15 billion are being spent this year. Among the big spenders are industrial giant Siemens with 6 billion euros set aside, and there's office software firm SAP. with 5 billion and Mercedes-Benz with 4 billion. BMW and Daimler Trucks have set aside 2 billion. And what does all this lead to? Of course, it's fewer shares on the open market and thus rising share prices, which is good for the company. Also higher dividends, as those have to be split amongst fewer shareholders, which of course is good for the shareholders. So there's winners on both sides, and that's why share buybacks are pretty popular on stock markets, and apparently they're on the rise in Frankfurt.
Quite popular, but are these share buybacks a good idea?
That depends very much on who you ask. As I said, companies and investors find a lot of good reasons to buy back shares, but many analysts warn that that money could be spent more effectively. It could be invested in growing the business, for example. Technically, that would be the best option to spend leftover funds for any company with a long-term plan for growth. Some say even passing dividends on to shareholders would be a better use of money, not least because that money would likely find its way back into the economy, with people either spending it or investing it again in other ventures. That sounds a lot more like growth than anything that a buyback would provide. However, sometimes companies find themselves in a situation where their options are truly limited. Let me come back to Linde, that industrial gas supplier that I mentioned earlier. That company works in an oligopoly with only 3 competitors. So investing in, let's say, the takeover of another company is off the table, as it would never have been allowed by market regulators. Or look at Bayer, the German chemical giant. They bought Monsanto a few years ago when they had the liquidity, and some argue that money would have been better spent on share buybacks, that with all the billion-dollar lawsuits, of course, that Bayer has to deal with now. In the end, there are probably better options for a company, and that's why on Wall Street, at least, insiders expect buybacks to actually drop now, partially due to a new 1% tax that the Biden administration has recently levied to discourage these programs.
All right, what are investors looking at in today's market?
Looking at Asia, Japan is in focus today. Inflation there has slowed to 2.3%. It's down for the second month in a row. It's due at least partially to lower gas and electricity bills in the country. Chances are now that the Bank of Japan will keep its monetary easing measures in place on Tuesday next week. Unlike other major central banks, of course, that have interest rates raised over the last couple of years, the Bank of Japan has always stuck to its ultra-loose policy, putting pressure on the yen, of course. Anyway, today Asian shares benefit from the news, but then staying in Asia, some Chinese businesses are complaining that the Houthi attacks in the Red Sea are really hurting their margins, with shipping rates rising, sometimes to more than double the usual rate. Meanwhile, in Europe, some analysts are also warning that prolonged disruptions there in shipping from China could be a new risk to Europe's economic outlook. So there's quite a lot of news to digest on this last trading day of the week.
Right, so much to digest. Thank you so much, Lance Horter, for giving us the details right there from Europe. Let's take a look at some stories now. See, Kenya has borrowed about $210 million from Pan-African lender as the government scrambles to raise money before a $2 billion Eurobond repayment that falls due in about 5 months. The funding received from the Trade and Development Bank adds to a $685 million loan approved by the International Monetary Fund earlier this week. The National Treasury expects further financing from the TDB before June 30th, while additional funds are expected from the World Bank and the Africa Development Bank. And global ratings agency Moody's revised its outlook on Egypt to negative from stable, citing increasing risk that the country's credit profile will continue to weaken amidst difficult macroeconomic and exchange rate rebalancing. Continued access to official financial support from the IMF was expected to increase Egypt's debt affordability, but policy actions and external support may prove insufficient to prevent a debt restructuring. Nigeria's raked in a total of $4.5 billion in revenue from non-oil exports in last year, which is below the $4.8 billion realized by the sector in 2022. That's according to the latest report from the Nigeria Export Promotion Council. While briefing newsmen on the 2023 progress report and performance of the non-oil export sector in Abuja, the CEO of the NEPC, Mrs. Noye Ayeni, said the drop in revenue was a result of political tension. Take a listen.
A total of 273 different products were reported to have been exported in the period under review, ranging from manufactured, semi-manufactured, processed goods. We also had solid minerals and agricultural commodities. This figure reflects a notable increase of approximately 28.04% compared to the previous or the preceding year. The breakdown of the results shows that based on the information received from the pre-shipment inspection agents, the PIAs, of the top 20 products exported in the year 2023, urea, cocoa beans, sesame seed, soya beans, cashew nut and kernel, aluminium ingots, hibiscus flowers were top of the list respectively. It's interesting to state here that hibiscus flower, amongst other products, has experienced a notable surge in exportation, thus propelling it to the top 10 ranking of non-oil exportable products.
All right, that was the CEO of the NEPC, Mrs. Noye Ayeni. Let's head to the other markets now. We see the crypto market today, all red right there. Just a few pockets of green at this point, seeing more sell pressure, more profit taking. Bitcoin down about 3.26%. Let's look at the top stories now in the crypto market. We see Fidelity's proposed spot Ethereum ETF. That's delayed at this point. The SEC in the US have delayed that. We also see Grayscale CEO saying that Bitcoin ETFs won't survive. He said that in an interview recently, and Bitcoin has topped silver in the ETF market. Let's bring in my guest now, Gilbert Jopata, financial market analyst. Hello, Gilbert. Great to have you.
Yeah, greetings. Happy weekend, Mr.
Yeah, so definitely this week has been all about ETFs. At this point, talk to me about the delays we're seeing, at this point, and how it's weighing on the price of Bitcoin.
Okay, this should be the delay in Ethereum ETF, right?
Right.
Okay, to that of the Ethereum ETF, it's more like the Securities Exchange Commission live up to the expectation to delay the ETF spot approval. And I'm not just saying this. Even the price of Ethereum was very unmoved by the news when it came out. Typically we should expect that a news like this should cause a major downside. But the fact that the price of Ethereum is holding up to a level shows that a larger crowd of investors actually expected a delay. I still acknowledge that the spot Bitcoin ETF approval was expected to more of set a precedent and more of a smoother approval for the Ethereum ETF. But the SEC have stated otherwise because, according to them, they need time to consider certain issues that are being raised. Since Fidelity joined more giants like BlackRock to file for the Ethereum ETF and also look forward to some of the deadlines that were set, it appears that this is not going to be the case because we may still be surprised that at the end of March, we may still have an extension. So the Securities Exchange Commission needs time to either approve, disapprove, or have more of a right institutional proceedings for that of Ethereum.
Right, but what are you seeing, next week? We're seeing weakness now with Bitcoin. What are you seeing next week? What's the catalyst that could drive prices back up?
For now, as much as I am very much of a fundamental guy, I'm very much also of a technical guy because I believe technicals help you look at price in the short term and even more of larger projection. The 47,500 to 8,000 zone was more of a local resistance for for Bitcoin. And then we got knocked in the head. And afterwards, I think that was yesterday, Bitcoin printed more of a bear flag. And before I came on this show, I still looked at the price of Bitcoin. It's forming a head and shoulder, and which means that we should expect more blood in the price of Bitcoin. There are certain support zones that Bitcoin is going to touch, and I still think it will have a way of affecting other alts out there.
Right.
I'm not going to make any projection that is other than what price action is showing me at the moment. Bitcoin have certain downside that is meant to touch.
Right. So no bold projections from Gilbert at this point for next week. Thank you so much. Always great having your perspective. Gilbert Rapata, financial market analyst. Thank you.
Yeah, thanks for having me.
Yeah, so we see the top gainers this morning. We're seeing, a couple of single digits, gains at this point, and it's just marginal, 1.55 render. So we're seeing sell pressure, as Gilbert said there. It's blood on the streets there in the crypto market. That's the show today. Thank you so much for watching. Don't forget to visit www.channelcv.com for more details. Thank you for giving us your Friday today, and hopefully we'll see more bullish action in the markets next week. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.